Testing, 1, 2, 3. All right. Good morning. Here we are once again, ready to trade the financial markets. My name is Lan Turner. Who am I? Why am I here? I'm a former instructor at the Chicago Board of Trade and Chicago Mercantile Exchange Education Centers. And I am currently an instructor of finance at Utah Tech University, and we're teaching university class how to trade. And so we come in here in the mornings and we watch the opening bells and we trade the financial markets together. Show you how it's done. Practice what we preach. All right. So this is the practical side of the preaching side. We go down to the university, and tonight we have class once again. It's the last class of our options class. It's like, options, Lan. I saw out on the little marquee today that you want to trade BitCoin. Yes, I do. Well, you're teaching an options class. Why are you trading Bitcoin? Well, we traded options yesterday. We worked really hard on it, did a lot of options. So I thought I would trade a little Bitcoin here first thing in the morning because Bitcoin's been ripping higher. Not to brag, but made a lot of money on Bitcoin here, real money. This is demo account, of course, because we're in a classroom environment and we're practicing and we're showing people how to do it, right? So we do lots of things in the demo account that we might not otherwise do in the real account just for educational purposes. So as a class, that's what we do. We do lots of trading and practicing and setting up software and changing things around and doing stuff to give people experience with lots of different things. So this is an educational room, and this is what we do. We practice. But in my real money trading, I've been doing really well in Bitcoin. Don't want to brag, but been doing really well in Bitcoin. So thought today we would practice doing a little day trading in Bitcoin, show you how that's done. And in my opinion, the very best place to trade Bitcoin is in the futures market. Now, a lot of people don't even know what the futures market is. So it's an introduction to them to realize that, hey, you can trade in somewhere other than New York City. New York City isn't the only place that you can trade. There's also a city in the United States called Chicago. Now, I know a lot of guys never been to Chicago, never even heard of the city. Who's ever heard of Chicago? But hey, they got two sports teams there called the Bulls and the Bears. I always like to tell that to people and watch them slap their foreheads and go, oh my gosh, I never put those two together. What? Chicago, Bulls and Bears is because of the trading exchanges in Chicago? Not watched people knock their eyes out of their head, hit their forehead so hard after realizing that. But yes, Bulls and Bears is out of Chicago because of the exchanges that trade there. All right. So that's what we're looking here. You have to have kind of a neat little piece of software to do it. And so let me show you the software I'm using. Maybe I'll just pull that up right now for you. I'm using Track and Trade, and the software I'm using is called Track and Trade Live, and it is the futures version. And so that's what we've got going right here. Just real quick, just so you know, if you want to trade the futures version with me, go over to trackandtrade.com. Download the live futures version, very popular software. It's won Stocks and Commodities Annual Reader's Choice Award 7 times. I know that says 6, but it's actually 7. 7 times. We've won it one more time since that graphic was made. So go get your futures version of the software. Come over here and trade with us on the futures exchanges out of Chicago and be part of the Bulls and the Bears. All right. So I thought it would be fun to watch these guys. Now, these guys don't really have kind of an opening bell, the same as the New York markets, but the markets still have a tendency to kind of move first thing in the morning because there is that morning bell over in Chicago. So this is especially the Bitcoin's traded 24 hours a day around the world, right? But it's getting ready to move here. Now this is a range bar 4, so it's really tiny, and you can see how wide the spread is. So we have to be real careful trading on that range bar 4. It's got a wide spread on it. This is the rate. I've got the range bar 50 down here in the left-hand corner. Let me bring this a little bit bigger. So we got the range bar 50 down here. That might be a little bit too big. And then this is the 15-minute chart, and then this is the 1-minute chart. And so we're just kind of watching these different time frames, you can see the little range bar 4 up here. That might be just a little bit too small. Bring that full screen, come in here, right click on it, change it to a range bar 6 and see what that does for us. See if that doesn't change just a little bit. Price bar, I like candles. And it's still a little small for that spread. And the reason is the spread. Look at the spread. The spread is 11, 12 points wide. So that's a pretty wide spread. So you have to be careful. Careful with it. Careful with the spread. All right. That's why you trade a little bit bigger market. This is, oh, this changed to range bar 6 down here too. I want to put that one at a different range bar size. So let's come in here and we'll go, we're not using, oh, there's range bar 12. Turn on Heikin-Ashi. So these are Heikin-Ashi range bars. I know it's a little weird. Heikin-Ashi range bars, but that's kind of my secret weapon. Shh. Don't tell anybody. They don't come here and join us. They don't know what my secret weapon is. My secret weapon is the range bar, Heikin-Ashi range bars. That's my secret weapon. What? What's a Heikin-Ashi range bar? Well, first of all, range bars, if you turn off Heikin-Ashi, let's come in here and I'll tell you. Come in here. A range bar doesn't have any time involved. So let's turn off Heikin-Ashi. This is what a range bar looks like. You can see it's a little choppy in here. This is choppy. You'd think it'd get a little less choppy, but it's moving around a little bit. Has some gaps in there. But what's happening is a range bar, if you notice, they're all the exact same size. That's kind of a small one. This is the 12. Let's see if we turn off the range bar, the Heikin-Ashi's a little bit bigger. See that? So they're all exactly the same size. So what happens is the market has to move a certain distance, has nothing to do with time. All the other price bars we look at are time, right? It's like, oh, each price bar represents 1 minute or 5 minutes or 15 minutes. Well, when you're trading range bars, it doesn't represent time. It represents distance of movement. So if the market has to move a certain distance before it'll give you a new bar. So one bar could be 10 minutes and one bar could be 2 seconds. Just depends on how fast the market's moving. And so what it does is it breaks up those bigger bars. So I give you the advantage of what that is. Let's say if you're on a 1 minute chart, and sometimes you get on a 1 minute chart, and let's say this is a 1 minute chart over here, and the market's moving really fast. Well, you get these great big giant bars. So in this amount of time frame, you get, great big huge bars. You get 3 bars. Well, if you're trading, we like to see more granular moves because we get our indicators come in more granularly. Does that make sense? And so it breaks these big bars up into smaller bars. And so in that case, you get your indicators move a little bit more smoothly, and you're not, sitting back here with a market that's taken off without your trailing stops moving or whatever, right? So what happens is it breaks up those big bars into smaller bars, and then you can deal with them a little bit better. But then because there's so many gaps, and on the range bars, they kind of move like this, right? They kind of look choppy. We turn on the Heikin-Ashi. And if we turn on Heikin-Ashi, that's a smoothing component. It's kind of like an indicator, but it's applied directly to the bars themselves. So you click Heikin-Ashi, and then you're like, whoa, that's cool. Look at that. Now it becomes more of a trending tool. Now, there's our perfect little setup right there, and I was blabbering, so I missed it. But there's our little setup right there. That's our trigger. That's our entry point. So we have an A, B, C, and down this thing went all the way back down to 130.9, which is the golden ratio. Pretty amazing, right? Now it might go past that. It might stay, turn and rebound there, but that's kind of our initial target goal. We like to see the markets go to 130.9. All right, so there is a little bit of method to our madness, in here. So that's called a decision point, actually, because you could have that market could actually go 2 directions when it makes that little decision point. So let me circle the decision point once again. So there's your decision point. You take your Fibonacci projection tool and you go like this, A, B, C, and you could anticipate that this market's going to turn and start to rally once again, right? So that's your ABC pattern to the upside, but it could also be an ABC pattern to the downside. So if you start here, A, B, C, it could go down. And so that's your decision point. And that's why we call them decision points, because the Fibonacci ruler says there's 2 directions this market could go depending on where you start your ABC at it. And so you have to take that into consideration, and you just have to decide which one you want to take. And since we're in a downtrend, we generally consider that the trend is your friend until it bends or ends, right? So it's in a new downtrend, so you might consider down, but it's also in an overall longer uptrend. So you might think this is just a pullback in the next leg up of the next uptrend. That's why it becomes a decision point. You don't know which direction it's going to go. Nobody does. So basically you got a 50-50 chance, right, of being right. Well, actually you have less than that. You have roughly a 33% chance of being right. Why? Because the market could go up. That's one chance. You get the market go down. That's two chances, or it could go sideways. So it could do one of those three things, up, down, or sideways. And so that gives you roughly a 33% chance of being right. So you have to get good at it. And that's why, because you only have a 33% chance of being right, you don't want to be wrong a lot or a big amount of time, a big amount of money. You can be wrong a lot. Just don't risk a lot in your process of being wrong. Cut your losers short, let your winners run. So when you're wrong, just recognize, hey, I'm wrong, get out. I had a 33% chance of being right, and I was wrong. Get out. That's the name of the game. If it turns around and then you would have been right, well, then you get mad, say a few swear words, but that's all you can do, because you can't be right and wrong at the same time. You're just right or you're wrong. If you're wrong, get out. If it doesn't follow through and just do what you thought it was going to do, just get out. Don't risk and lose a whole bunch of money trying to say, well, I know I'm right. I'm going to wait, because the market doesn't have to listen to you at all. Doesn't have pay no attention to what you think. All right. It'll do whatever it wants. And so you just have to say, well, I got a 33% chance at this decision point of being right. And if I'm wrong, I just have to admit it, get out and wait and do it again. Because these little patterns come along all the time. They're everywhere. You see all these little patterns in here. They're all over the place. So you have all these little opportunities to make these decisions. You don't have to say, well, it's the only opportunity I'm going to have for the next 42 hours. I better take it and be right. No, it doesn't work like that. You got lots of opportunities. Okay, look, another one's coming up right here. Is this going to be another decision point? Is that going to be a red bar? Now, all we're really doing is looking for a market that's trending, right? We want a market that's moving and then gives us a little break in the trend right there. See, little green bar. Hey, that's not normal. Why is it doing that? Well, because it's hesitating and then it moves once again. Hey, that's not normal. Look, it's red, 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 red. And then, oh, it's green. Hey, that's an opportunity to make a decision. Hey, green, 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 green. Hey, there's a red one. What's going on with that? Let's make a decision there. All right. So you can do these little reversals. That's another pattern that you can trade. You can say, well, it's going red, 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 and then it turns green. And then you can think it's going to go green, 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 green. That's called a reversal. So a continuation would be this one. This would be a down and up. That would be a reversal. Reversals are harder to catch. All right. Reversals are harder to catch, but nonetheless, sometimes you get reversals. So here's a little green, 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 green right up here. Look at that green, 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 green. And then down, 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 down. So you got a little reversal in there. All right. But you got that little ABC pattern in there, right? Not quite so ABC, but you can draw it all the way from either any of these little points, these little decision points here, here, here. See that? Or you can draw it from up here, 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 here. You can get another little projection, or you can go with the full distance here, here, here. All right. So that gives you a larger distance that you can go from. You can even do something that we call the cone of probability. You can come in here and you can go from this peak right here and go here, here, here. And then you can do another one from here, here, here. And it gives you what we call a cone of probability, that the market's going to probably stay inside of this cone right here. It's called the cone of probability. Now this one's kind of falling out the bottom of that cone a little bit stronger, a little bit more, not quite staying inside the cone. It's got a lot more strength to the downside. That's not good. I'm long in my real money account. I'm long, but that's okay. Not so bad. We'll add some on. Let's see. We're going to come in here and we got another little rally there. It's coming down to the magic blue line. Why is that magic blue line so important? Because everybody thinks it's important. Therefore, it becomes important. Remember, everything about trading is about the psychology of the human nature of traders. So it's all about the human nature of traders. Now, we're We're getting a little bit less of that as we have a lot of people, a lot of big companies trade with computers, right? And so it's more algorithmic trading. Let's turn the Heikin-Ashi on this one. Watch this. Boom. Pretty cool. Pretty cool. Okay, that's a range bar 12. This is a range bar 6. This is a 1 minute. This is a 15 minute up here. So we got that big rally and then it pulled back a little bit. So, Lan, you haven't taken a trade yet, and there's been all these great, wonderful things come by. You've missed them all. That's okay. You don't feel like you have to trade to every single second. I was lecturing. I was giving a lesson. Giving a lesson. That's what we do in here. We learn. I'm here to teach. So I lesson. I lecture a lot. If you don't like that, hey, there's another guy over there. Go watch him. But if you like to learn, be lectured to, then come over here. I'll teach you. That's what all this stuff is. That's what I'm here for. That's what it's all about. It's all about the learning, right? It's all about the learning. Down here on the 1 minute chart, you can see this market's continuing to fall, breaking below the blue line. There was a little movement right there, wasn't there? A little kind of a little shelf in there. I call those shelves, where the market created this little pullback like that in the overall downtrend. This is kind of a little shelf, not quite so much. But that little shelf there is kind of like a little 4-bar rally, a little pullback. Oftentimes on a 4-bar rally like that, we look for that to be a reversal, a couple bars back, and then a bounce and a rally. We didn't get it this time, but maybe this one here. Kind of get this, looking for this thing to turn around and start to go back up. Is it going to do it? Nobody knows. It's in a downtrend right now, so we don't really want to be taking long positions. We don't want to be trying to take every reversal. The trend is your friend. And the friendly trend is down right now. So you should be taking every position that says down. But it's starting to wimp out down here a little bit. And notice in the Heikin-Ashi range bars, you get lots of flat bottoms and flat tops. If we got markets in a downtrend, we're getting flat tops. Markets in an uptrend, we get flat bottoms. We like to see those flat tops and flat bottoms. That means we've got a good, strong trend. If we're getting lots of topping tails and bottoming tails, that's not good. And one of the problems we got right now is that look how wide the spread is. 12, 13 spread, 10. That's not good. It's hard to trade with a 13 wide spread, especially down here on a tiny little time frame like the range bar 6. It's just eating up the entire range of the moves. Down here on a range bar 12 is a little easier. Markets are moving a little bit. We're starting to break higher. See, that's come down here on the range bar 12. And it's bounced off that that magic blue line. Let's see if it doesn't want to turn and rally at this point. We can watch these little shorter term time frames in here. Let's go ahead and take a couple of, we're going to put some in here. And I'm going to put a stop in. I'm not going to take a big risk. If the market doesn't want to trail for me, I'm just going to, it doesn't want to just go up from here and reverse. So this is a reversal. I don't generally like to trade reversals, but feeling a little pressure to get in here and show you guys a trade or two. But I would generally like to wait for this thing to move and prove that it wants to start to rally, get up here, and then get one of those little red bars and then a continuation. But I thought just for fun, we'd try and see what, oh, see that? Get out. Get out, Lan. Yeah, it's not market, not doing what I wanted, so I just get out. Still, the trend is your friend, and it's on its way down. So we could probably take a short position off this, bounce off this blue light now. So we'll kind of probably feel bad we didn't go short instead of long. But I thought maybe we'd get a little bounce right there. I thought we were going to try and go long right there, and I was wrong. So I'm wrong. Just get out. I had a 33% chance of being right, and I was wrong. So what do? Just get out. Sometimes you learn more from being wrong than you do from being right. Oh, my hell, look at that. I was really wrong. Good thing I didn't stay in there and think, well, I'm just going to wait and ride it out. Doesn't mean it can't just turn around and come back for you and let you ride out some big move like that and then come all the way back. But I'd rather not do that because sometimes it just keeps right on going down. Like right here. We'll try it again. We'll see if it's going to go down. Going to put our stop in up there. I'm wrong again. It's going to go sideways this time, not down. Ooh, am I going to have 3 strikes and you're out, Lan? You get 3 shots at it, and then you got to wait for an hour. There's 2. That's wrong again. I thought we might get another drop. See, I thought it would go down, up, down again. It didn't. Instead of going up, it's just going sideways. That's one of the 33 percenters. We got a big drop. I'm kind of looking for it to turn around and go back up now. Look at that big drop on the 15-minute chart. That spread is so wide, 13 points wide. That's why I like to trade the S&P and the Dow and the Russell and the NASDAQ, because their spreads are really tight. Like they're only like 2 or 3 sometimes, 1 or 2 sometimes. This spread is 17 today. That's really wide. It's got lots of action going on. Down here on the range bar 12, we're rolling around. Maybe we're trying to be down here on the range bar 6, which is a little too small. We can switch that and just start looking at a chart that's not quite so tiny. Let's trade the range bar 12. We may have a little better luck on that one. Not affected by the spread quite so much. Keep our eye on that range bar 6, because that's just kind of a macro version. This is our 1-minute chart down here. We like to trade 1-minute charts. Come on, baby. Let's rock and roll. It's coming back on us. This chart has the bulls and bears turned on it. That's why it's red, yellow, and green as opposed to just red and green, just a different indicator. So it tells you the neutral zones. It tells you Fibonacci neutral zones. So that's what it's doing. That's a Fibonacci sweet spot right in there. And it's starting to go green. So it's green. It's breaking above the sweet spot, going into the Fibonacci extension to the upside. That's a good sign to be returned to bullish. Let's see what's going on here. Let's see if we can't let's go ahead and turn this off for just a second. I'd like to see another little pullback. If we're going to turn around and start to rally, see that? Bitcoin 1-minute chart's trying to go up. Let's see if it won't give us one little pullback, maybe up here around the blue line, give us a red bar and then another green bar, and then we can anticipate a continuation of the uptrend. This is just kind of a rolling bottom here. Rolling bottom. Grab my tool. That's kind of just a rounded bottom, isn't it? Just kind of went right down, just like that. That's called we can look for a little cup and handle. That'd be the cup. We get the handle right here, and then we can look for the next rally up. Ooh, look at that. Land took 2 shots at it and missed on both of them. Let's come and say hello to a few people. We got Gary Thomas in the house saying hello. We got Bruce R saying hi. Bruce, you're going to see you tonight in class. Steve Watts. We got Kirk Schwartz says, good morning, folks. We've got Dr. Steve Watts. Hey, Dr. Steve Watts. I said good morning to you up here. What you saying? Me too. Me too? Did you take the wrong direction too? You get stopped out too? Michael Bruce, how you doing, Michael Bruce? Good morning. I love your bowl. It's a nice bowl you got there going. B. Taylor says good morning, Lan and everyone. John David Lundberg saying hello. We got Larry McIntosh in the house. Nice to, oh my goodness, look at that market go without me. I'm over here saying good. Well, I didn't get a signal. I guess I got a signal right there. But is that one I thought we were going to go short on? I took the wrong direction. Guess I did. Higher highs, Lan. Higher highs and higher lows. That make our market went up. Hit the little green trend and went green again right there. And that little green trend, I thought might be, I think I took a short on that one, right? I thought it was going to go up and go down one more time. Okay, so now we got a big up. Red bars. But it happened right at that stupid blue line again. That stupid blue line. So is it going to go green and going to go up from there? Is that what it's going to do? What's it going to do? What's it going to do? We're in a decision point. It's going from green, red. Sometimes it just goes straight. It doesn't give you the little Sometimes it just goes green and then red, and you're like, oh, I missed everything. Didn't even give me a chance to do anything. That's no fun. Come on. Now it's died again. Went back to the blue line and just said, huh, I don't know what to do, so I'm going to go sideways. I ain't going to go up. I ain't going to go down. I'm just going to go sideways. Okay, then it's going down again. Well, now we got a down arrow. That's a reversal. Reversals are hard to catch. I'd rather catch a trend. Up, straight back down. I want to see it break and go long. I'm bullish now. I'm bullish. I think the market's going to go up. So I'm waiting for an opportunity to get in long. Got to have a first green candle. Green candle? Is that going to be our green candle? Thing is, it looks green now, but sometimes it goes green and then turns red. So you have to wait just a second. We'll see if we can get in on this one. Then now it went red again. What's it going to do? What's it going to do? I'm looking for it to go up like this. Up, down, and then continue back up again. Nope, it didn't want to do that. It gave me green and another red. That's down. Down? You're going to go down again? So red, little green, down, red, right? So that should be down. Of course, it might not go down. It might just go sideways. And then we get our hiney handed to us again. Come on, man. You got to pick one, right? 3 strikes. You get 3 chances, up, down, or sideways. You've already picked it wrong twice. Decision points. Come on, decision point. Follow through for me. Down, 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 down. Click, 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 click. Where's your stop land? I don't have one yet. Don't have one. Problem is those yellow dots are my stop. Let's put one on there. All right. There you go. Problem is that spread is so wide. Those yellow dots might get inside my spread. That's what I'm worried about. Come on, clickety click. Sometimes you think, whoa, why didn't you get in on the red to green land? That spread was so wide that, man, that's how far it went before I could get in. Look on the range bar 6. You're like, well, you should have got in on the range bar 6. It's a little bit smaller. You could have got in a little earlier. Well, that's true. But we decided the range bar 6 was too small, right? Because of the spread. Got to make our money back. Is it going to move far enough for us to? No, it's turning green right here. We at least got to break even. Come on, you rotten little bugger. Shit, or get off the pot. Oh, land, you just swore. Now you got to go to confession. Yeah, but it wasn't a real bad word. It wasn't an extra bad word. Just a bad word. Are there rankings? Are there some worse words than other words? Well, YouTube seems to think so. If I say the F word, then I have to then they really get mad at me. And I have to click a different box. If I just say the S word, that's okay. You click the first box. If you say the F word, then you have to click the second box. All right, we're dropping again. Let's edit this order and let's stop trailing. All right, we're going to stop trailing. Just see if it doesn't fall. Let it move around a little bit. Give it a little bit more breathing room here, not try and be so tight. Got ourselves to break even. Let's see if it's not just going to come on down. Back it off a little bit. Maybe we'll start trailing up here on the 1 minute green bars. Green bars on the 1 minute chart. Look on that 1 minute chart, it's a little choppy. 1 minute chart, we got 3 drive pattern. Drive 1, drive 2, drive 3, and a rebound made an ABC. If it doesn't go down and break a new low, then that would be a reversal point, and we'd look for another rally. You're just going to get stopped out of break-even land. You're up $32. You might as well just take it right now. It's going to stop right here and go back up. That's too far for it to go down some more. It's not going to go down anymore. How do you know? What makes you think you know so much? Because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars. That's all you ever get. It's 10 bars. And then it turns around and pulls back. So you might as well just get out and take your money and wait for it to fall again. There wasn't any money in it. Didn't go far enough to even from my entry to my exit. Look at a little range bar it wants to go. You're just trading too small of a time frame, land. I know, but it's fun. If we squeeze it down to where the range bar, you see it's not really moving very much. To where the spread isn't so wide. See, I shouldn't have got out. Now it's going to fall again. Well, get back in. You can always get back in. I know. You're going to wish you'd already didn't get out. I know. Let's try it again. See if it's going to go with us. No, you're going to lose again, man. This market's not moving as much as you thought it was. It's not. It's not. Profit box is too tiny. Man, it just suddenly stopped, didn't it? Just suddenly stopped on us. I'd have just taken the arrow, land. I'd have just taken the arrow. Well, that's basically what I did, wasn't it? Boy, that thing has got a weird spread on it, wide spread. There, we dropped a little bit more. How many of you guys are trading the Donald J. Trump stock? We could go watch that today. That's been drawing a lot of people's attention away from everything else. Is that thing going to go? Come on, you rotten little bugger. Not having a whole lot of luck today, guys. You going to put your stop in, land? Well, I guess. Still slow, lazy market. Maybe rather than having it here, well, we'll just keep it there for a minute. See, that's getting in there too close. It's going to stop us out. But that might be what you want to do because it turn around and go back up. You want to get stopped out. I know, but let's do it down here on the 1 minute chart instead. Get stopped out. They'll hold back just a tiny bit farther just in case. Slowed way down, hasn't it? Not doing anything. Just dead. Died on us. You see up there in the upper right hand corner, see the white line? That's the last time it traded. These are bids and asks. Those are not anybody executing any trades. The white line is when it executes a trade. Executed one trade there, a little bit down, but these are the bid and the ask. People bidding for it, asking for it, but they're not trading it. No, they're not matching. That white line up there in the upper right hand corner, that's where they match. That's where they actually trade. So you can see there's no trades going on. It's just the spread is going up and down. Spread is going up and down. Okay, there's somebody sold. They're sold again. The volume is really low, 51. There, pop, a little bit. Up. People are selling now. See them selling. That white line. The green and red is just the bid and the ask, and it can move up and down without selling, just because nobody comes together and makes a trade. That's the white line. There we go. There we go. What's wrong with my OCO? Oh, it's just so tiny. I want to make. Oh well, we got our money back. It's still dropping though. If it breaks back, within $2.50 of getting our money back. Still red on the day, $2.50. Should have stayed in, Lan. It's still going down. I know, but I like to trade to get my money back, and then I can start trading again. Once I get my money back, then I'm happy, and I can trade from a happy point instead from a sad point. That's the way I do it. You don't have to do it like me. I'm just showing you what I like to do. If you want to stay in, even though you've made your money back from your loss, stay in. See if you can't make more money. If the market's in a trend and it wants to go, let it go. So you ought to be up making more money right now. But I got down. I had 2 losing trades. I had to get my money back. Well, now we're starting to show a little progress. That's another trend opportunity right there. Is it going to go down again? There it goes. Should we take it? Oh, look how far down I got. Oh, look at it. Cascade. Yeah, now it's going green. Get out, Lan, get out. Another little shelf right there. Now we're back down again, $31 more again. Okay, is this the turnaround point? Look at what it looks like down here on the range bar 6. Maybe we'll get a rally and little red bars, and then another rally, and it'll come back to the magic blue line. Just that spread is so wide for this tiny time frame. We probably should be trading a little bit larger market. Just a little quiet today. It's not doing too bad. I mean, it's making some nice trends. Look at the 15-minute chart. Let's come down here and look at this one. Just this is the 1-minute chart. See, the 1-minute chart's being a little choppy. Let's go make that a 2-minute chart. Let's see how that looks. That looks a little better, doesn't it? Still moving a little bit small movements. 2-minute chart. That looks a little nicer. Oh, look at it getting ugly right here. Can't decide what it wants to do. Big topping tails, big bottoming tails. Still looks like it wants to go down on the 2-minute chart. Boy, that spread's really wide. You take that down to where the spread's not anything, and you see the market's really not moving. It's just really almost dead down here on the range bar 6. Range bar 12, I almost want to change that one too, but I don't want to. Let's come down here and make this, instead of range bar 12, let's go up a little bit higher. Let's go up to the range bar. Let's go 20. And I'm going to change that back to candle. I don't know why it always flips it every time you change that time frame. It changes it. That's a range bar 20. That's no Heikin-Ashi. That's Heikin-Ashi. This is the 2 minute down here. Okay, the range bar 6. Looks like it wants to turn around, doesn't it? Is it going to go back to the blue line? Magic blue line? No, staying below the average true range. Average true range is right in here at those yellow dots. It's bouncing off that. It's going to flush once again. Give us a little shelf right up in here. Little natural trend line. It's a little flag formation right here, a little pennant down here on the 1 minute. So it's going to continue down. We got drive 1, drive 2. So here's drive 1, here's drive 2. So that's our little counter trend down here on the 1 minute chart. Make this, and didn't give us any green bars. Looks like to me it wants to fall again out at the bottom of this thing. Give it one more shot here. It's going sideways on that range bar 6. It's not doing anything. So go to the 15-minute chart. That's a long bar on the 15-minute chart. Just in with one. Let's add a second one. Okay, come on. Let's see you get off the pot. $25. You gonna just get your money back, Lan, again? I'm only down $31. That's not hardly a loss. That's just kind of still a break even a little bit. But we could be very conservative and just take it off. But let's see if the market wants to come down and test this low point right here. If it bounces, that won't be good for us. Come on, baby. Got that natural low, that previous low right there. It's got to break past it. Psychological barrier. Watch that tiny chart. This is no volume's nothing. Look at volumes. This is nobody's trading Bitcoin today. They're probably all over trading Donald J. Trump. Look at that white line. It's not moving at all. Nobody's trading. The bid and the ask is going up and down, but nobody's accepting a bid. Nobody's accepting an ask. Nothing. White lines not moving. No trades. No trade taking place. The bid and the ask have dropped way down below. There we go. Boom. Somebody bought some or sold some. Bought a short position or sold some long position. And then they just bought it right back again. It's pretty bad we can watch one trade at a time. pretty quiet market. Pretty quiet market when you can watch just one trade at a time. All right. All right. $7.50. So we got our money back. This is like watching paint dry. All right, guys. We're done watching paint dry. Just for fun, let's go over. If you want to trade Bitcoin, though, just wanted to give you an example. This is how you do it. Of course, you can do it on a longer term frame. We're sitting here trading these little tiny charts because it's fun. But oh, look, it's still going. We could have stayed in, made another $20. Let's go. Let's go see what Donald J. Trump's doing. Should we? There's Trump right there. Nope, that's not Trump. This is Trump. Oh, look at that. He took off. Well, he had such a big move yesterday. This is kind of a little pullback today. So that's the Trump. Go full screen on it. So what happened? Where's the 730? So right out of the gate, flush. Old Donald Trump lost a little bit of his billions today. It's a 1 minute chart. Way down here. We're going to get a call to arms on the MACD. We're going to start to rally now. People are going to buy into it. Boy, it went all the way from $72 down to $65. That's a big loss. That's a big move. 12%. Dropped 12% today. 13%. There's our first green on the MACD. Look at that. Now it could be, again, doesn't mean it's a turnaround. It could be just a shelf and it dropped one more time. Do we want to do a little day trading? Oh, look, we're down $800 in our account. We have to go see what's losing money and what's making money. Yesterday we had a good day. Did I bring up my spreadsheet for yesterday? That option we put on in the S&P 500 paid off. Remember, I put a limit order on for $100, and I said we'll just take it off if it hits $100. But then the market went completely sideways. Didn't do anything, right? Went completely sideways. So when it was about ready to hit $100, I took that order off and said let's do $200. And so then we come in here. So yesterday, our day trading, we had our first loser in a long time. Ooh, all the way down to 140. But then on our options, we had some options pay off. Futures market, Iron Butterfly profited $230. I could have let it go longer, but the market was dropping during power hour, so I took it off and took the money and run. So we initially said we were going to do 100, and then we did 200. The stock market cleared out our profitable option. We rolled. Remember, we rolled one yesterday. The option was up, a winning trade of $650. We had to cut one of our losers. So we cut a loser, which was losing $446, bringing our total profit yesterday in our options that we took off the table for $200. So that's how we ended up with 400. So we ended up with a nice trade in our Iron Butterfly that we did yesterday, and then also a little bit of an option profit in the stock market. But we lost in our day trading. We didn't do so well in day trading. And then combined, we made $295. Did we hit our goal? We did. Our goal was $236. Our max loss was $472. So monthly goal is $202,995, and we've made $10,000. But we had one really good run. That was an option that came off in the stock market. And remember what we do. Now, of course, this is all classroom stuff, right? I mean, this is all classroom. We're just teaching you how to do it. When you're doing it yourself, you're going to be doing this with your real money accounts. This is all demo account. This is all just lessons for the class. This is for our university class and for our YouTube class. And so this is just an example of how you track your money. But we had a really good option. So what we do is we take our profits from day trading. And one day we went hog wild. That's kind of a day where we were testing a lot of things, right? And demo account, you don't really care because you're testing a whole bunch of stuff. But I wanted to show you I wanted to teach you how to do the spreadsheet. So we had to start off with that first one. That was when we were doing a lot of experimentation with the QOCOs, and we were setting them all up, right? We're trying all those things with the QOCOs. Remember that? So then we just had so that's how that works. But when you make money in the day trading, you take that money and you take it over and put it in the stock market and invest it for the longer term haul. put it into some options, put it into some other things, and invest it as opposed to day trade it. So we take our day trading income and put it into the stock market, and that's where we get our options. And then some of them really pay off big. Like that one was a big day. We had a big stock market options account, took off one of our huge winners. I think it was on Home Depot, if I remember correctly. I should have written it down, but I didn't. All right, so that's where we're at. So our running profit and loss is 10,000, but our goal for the month is 2,995. Now that'll continue to change as we go down and make money or lose money. That's just a total of this daily goal. So we take all of our daily goals, add them all up as we come down the column, and you're going to get a monthly goal right down here. That's 2,995 is our monthly goal, but we've hit $10,000 thanks to one of our big options that we scored on. All right. So let's see. Let's go back over and look at, what did we make? $7.50 on Bitcoin. Look, it's turned and rallied once again. Okay. So what did I say? $7.50. So we'll put our $7.50 in here. And that thinks it's a 7.50. Thought it was the time of the day. Okay, $7.50. Let's bring that down. Our new goal, $3,232. And how much we made? $10,000. So we're well within our goal. We only made $7.50 today. But we haven't done our options. You want to go take some options off? We could go over. Oh, look, it's starting to rally again. It's turning around down here. Let's see where we're at on our options. Let's come in and real quick, we'll pull up our YouTube class portfolio. I got two of them in here. How come I got two of them? Apple. Ooh. What's going on with Apple? Oh, we need to clean our cache out on Apple. And didn't load properly. All right. What about this one here? This is our Archer Daniel Midland. Lan, are you going to go back and clear your cache for Apple? No. We'll go look at it in a minute. It's losing some money. We bought a put and it's rallying. All right. Let's see. Archer Daniel Midland. Maybe we ought to take that one off. It's peeking out up in there. It's probably going to give us a little bit of a pullback. We said that like 6 times. Look, how many times did I draw that arrow? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times yesterday. That thing's going to probably pull back. Liquidate. Market. Pop it off of there. Let's just take a little profit. That wasn't a good entry anyway. We got in a little high. Let's wait and see if Archer Daniels Midland's going to fall back a little bit. Give us a little pullback. Maybe come in, give us an intercept of this 50-period moving average. And then we can get back in and go for the next leg up. How about that? That's a good plan. Albernacky, we're not in it. What about DFS? It's trying to break higher. It's trying to break higher. It's making $75, so I guess I can't complain. It's not red. General Mills. It's trying to break higher. It's trying to break higher. We'll leave that one on. Google. Google's peeking out. Getting a little worried up here on our Google. We bought some insurance on this one in anticipation that it was going to fall at that point right there, wasn't it? We bought that insurance right there. And it's down $46. Not real happy. I don't think we're going to get any explosive runs on Google right now before we get a pullback. Probably get a little pullback and then another turn and a rally, come back into the Fibonacci sweet spot. What do you want to do with this one? What are you going to do with this one, Lan? Options. Let's just kill this thing. Take that one off. Right click, liquidate the option, kill that one, mark it. Let's get that one off. All right, let's go look and see what else we got. Gap. Oh no, Gap. That's the one we rolled yesterday. We took 650 off. Now it looks like it's going to fall. Let's go ahead and liquidate that one. Shouldn't have rolled it. We should have just taken our profit, huh? Hormel. Well, Hormel's trying to go. We're on the backside of the MACD. That's generally not a good sign. Doesn't mean the MACD can't curl and turn if the market wants to curl and turn. Let's see if it'll go. I win shares. We're just in it long with a contract. We only have 27. That's a Russell. That's the Russell. It's not doing anything. It's just kind of sitting there, isn't it? What would it take? How much money do we have? We have $73,000 in buying power. Sitting on the sidelines. Look, now it shows we've realized profit at 233. We got a loss of one. We got to go see where we're losing our money. Apple's one of them, $140. Is Apple going to turn? Apple just got sued. Everything is going bad for Apple. I don't know how come their stock's going up. Mostly because people just want to buy some Apple. It's down low. It's getting been beat up really bad. Let's see. We bought more shares of this. 27, 28 to 930. So that would give us 83 that we'd need to buy to get 100 shares. 83 shares. That might take us. That'd be $12,000. Then we could do a covered call. That's the reason I'm thinking that. I can sell some puts up, sell some calls and collect some premium. But then we have to take our stop off. Coca-Cola. Finally Coca-Cola is starting to pop a little bit. We got 100 shares of Coca-Cola and we got a covered call. Oh, we're going to only receive $25 on the covered call. Yeah, it's $25. Mags. Mags. Mags is falling. $70 on Mags. What is this one here? This is a put option, isn't it? We got that in there as an insurance policy against our long 50. Mags ain't doing well. That's because the market's just so peaked out. It's just like, it's so high. Yeah, it's going to drop a little bit. You want to take it off? Let's just put a stop in there. If it drops any further than this, we'll just get it off of there. Stop. We just put it right there. We just want to see if it'll. Of course, I don't know. We got our put option in there. Let's just let it play. We got our protection to the downside. Microsoft. Yeah, that's one that's fallen. We got 51 days. We got how many shares in here? 400. Oh, that's a call. So we got a call in here, a 420 call. And we've got a sold put, bull call spread. So bull call spread, we're in this bull call spread for another 23 days on Microsoft. We're going to collect 232 on the bull call spread. We're up 98 right now, still just waiting for $134 of time decay. But in the meantime, we're down $50 on our $1,800 long call for Microsoft. I think it's going to continue. We want it to go up. Like, I thought you wanted it to go down because you got your $232. No, I want it to go up. You want it to go up. That's why you bought the call. That just means we'll sell it right there. We'll just sell it out right there. We'd make $2,139 if the damn thing would go up there. And then we'd collect an additional $232 on top of that. But that's just the consolation prize. $232, that's just the consolation prize. Guys, don't play for the consolation prize. I mean, it's nice to have, but that's not the game. You're not just trying to get consolation prize. You're trying to get the whole damn thing. I want to pop all the balloons. I don't want to just pop one balloon. You don't get the big panda if you don't pop all the balloons. All right. What are we doing here? Same thing. Bull call spread on Pfizer. Long 100 shares. Oh, this isn't a bull call spread. This is a covered call. So we're long Pfizer with a covered call, picking up an additional $52, and we're up $28. So that's a good trade. That one's working out for us a little bit, but it's not doing as good as we want. We want to pop all the balloons, right? We want that thing to go up above the red line. It goes above the red line. That's max profit. Okay. Procter & Gamble, 66. Same thing here. We got 100 shares long, and we got our covered call. We want it to go above that red line. Right there would be the perfect trend right there. That would give us our full max profit. People get confused. They think, oh, you put on that put option. That means you want the market to fall, right? Or stay down here. No, that would be only popping one balloon. I want to pop all three balloons. I want that baby to rock and roll. I want it to go up there. I want to get my full profit from here to here. Plus, I want my premium. I get my premium. I want my 204. Plus, I want the profit between where I got in and where I get out, which is that one there. So $272 on the long position, plus 204 on the covered call. That'd be a $400 trade. If I could pop all the balloons. It's just a carnival game. Just a carnival game. All right. PLTR. We're down 190 bucks. What's going on here? Palantir. We bought two calls. We bought a call here, right? What a stupid place to buy a call. But of course, when we bought the call, we didn't know that was a stupid place to buy it. Yes, we did. Look, the MACD's coming down. You're on the backside of the MACD. Yeah, but it was curling and starting to go back up. We thought, I think this was a Kramer recommendation. Kramer said to buy. Who listens to Kramer? You're supposed to do your own technical analysis. Don't listen to Kramer. He can tell you what to look at, but don't do what he says unless it works out for you. Well, we thought maybe it was going to be an ABC land, ABC. And that's why we dollar cost average, because we made a stupid mistake and got in halfway up the trend. So when it came down, we bought another one. But now that's a head and shoulders formation, and that thing looks like it's going to come back down. But it could go up or it could go sideways. What are you going to do? You're down $195 on this trade. And Palantir doesn't look like it wants to go up. That's a head and shoulders top formation. That's all bearish. Should we just take our lumps? Because that's a heavy lump. That's a heavy lump to take. All right. You want to hang on to one of them just in case? Get rid of this one and hang on to that one? I guess we could do that. Liquidate. Let's get rid of that one. And just see if this will, see if it wants to bounce and go back up on that right shoulder. I don't know. I don't know what it's going to do. Nobody knows. All you can do is throw your darts. We got a couple more down here we can look at. AT&T. That's a nice covered call. We're long AT&T. We got our balloon sitting up there. Going to collect an additional $19. We're up $9.50 on it. What do we want to have happen? We want that thing to go above the red line. We get max profit if it does. Max profit goes above the red line. Oh, wow. I thought you wanted, when you did a covered call, you wanted the market to fall. Whoever told you that was probably on that other YouTube channel. That guy don't know what he's doing. If anybody tells you you want a market to fall when you buy a covered call, turn off their channel. They don't know what the hell they're talking about. Max profit is when that thing goes above your red line. Yeah, they're going to take your shares away, but that's max profit. That's what happens. You want max profit? They take your shares away. That's max profit. You want to lose money? Okay, well, lose money then. It goes down when you get to keep you keep your rubber mouse, $19. I don't want the rubber mouse. I want the whole damn thing. I want to hit all three balloons, and I want to get that thing up above that red line, and I want to take my profit between the green line and the red line. Plus, I want my rubber mouse. That was funny, a rubber mouse. How many of you guys have ever got the rubber mouse? I get the rubber mouse a lot. You go throw your darts and you only get one balloon, they hand you a rubber mouse. You just paid $5. Get a 19-cent rubber mouse from China. I don't want the rubber mouse. Oh, hey, Dr. Steve says that he's doing really well over there on Bitcoin. We should go back to Bitcoin, take a look, and see how you do. How you doing over there on Bitcoin? You're doing good on. I'm doing well on Bitcoin. I'm holding it longer term, right? What I do is I bought a whole bunch of Bitcoin, and then when it goes up, every time it hits $500 in profit, I just take the 500 off, and it hits another 500. I take it off. Hits another 500. I take it off. If it goes down, tanks down, I start adding in again, put in a whole bunch more money, and then it starts going up. Every time it hits a $500 profit, I take it off, and I've made thousands doing that because this Bitcoin's just been going straight up, right? It's been going to the moon with these new ETFs. So yeah, Dr. Steve's doing well. So am I. Didn't do so well today in the day trading, but we had fun, didn't we? We threw a few darts and popped a few balloons. All right, there's Win. That's the one we're hurting on because we did the same thing in Win that we did up there on that other. Oh, we're hurting on Tesla too. Tesla. How long we got on this? 114 days on Tesla. I gave you my rant and rave about Tesla yesterday. I just think that sometimes I worry that Elon Musk's politics get in the way of people buying the support for his company. That's all. Win. Well, it's starting to rally here, but it's not going fast enough. We only have 86 days, 23 days on this little call. And it rallied a little bit right out of the gate, didn't it? And then it pulled back. We weren't paying much attention. Boy, this thing is going into a wedge pattern like that. And it's got a little kind of a little flat bottom there. We're going to wait a couple of days on this one. We're going to hang on to it, all right? Hang on to that one. We're down $460. That's our big loser. That one in Tesla. Tesla's a loser because it's such a big market. We've paid $2,290 for one Tesla call, 114 days out. That Win, we picked up a second one trying to dollar cost average, and we're down $452. Let's go look at that one. 192,260. So this one up here is losing $260. This one's losing 192. We only have 23 days left on that one. Let's come in here and liquidate that one. Not liquidate it. We're going to put in here and say if we can just get it back. If you can just get back to break even, I'll be happy. How much we have to receive? $362 to break even. 360. This goes to 365. Receive 365. That'd be a loss of 190. We need to get back to break even. Let's go this way. If we can get back to break even on that one, we just take it off. I don't know if we'll ever get back to break even. It's going to have to do a good little dance right there. Only got 23 days left. 4, 20, 34. It's got to go 40, 97, 95, 91, 94, 71. There we go. We're getting closer. 71, 67, 62, 55, 43. Boy, that thing's going to have to go all the way back there to get to break even. 16, 6, 5, 4, 3, 2, 1. There's break even. It's got to go to 555. It's currently at 365. All right, we'll put that order on there and see if while we're sleeping, if it goes back to break even. We'll take that one off and we'll hang on to this one that's got more time. So that one's got how much? It's got 86 days. We're going to do a little drawdown on this market. So Tesla. Tesla. And Apple. Apple's starting to rally on our put option. Let's take a lump on that one too. We'll just pull that one off. Actually, I'm not going to pull it off. I'm going to leave that on for a little bit. All right. Okay. So what did we end up with today? $135 down because we cleaned some of our, let's see, chart. See, closed. What did we close out today on all? So we closed out that 196 that we pulled off on PLTR. So we end up making $37 today in our options. So should we put that in here? $37 stock options. Let's come in here and say we cleaned up a few. New comment, new note. Cleaned up a few of our stock options. Took off some losers. Took off some winners. All right, so that's why we got $37 in there. Okay. All right, guys. One last thing I got for you. One last thing before I let you go for the day. Save that. One last thing before I let you go for the day. Pit News Magazine. We're just getting ready. We're just finalizing the last few sections. We just put in the trade recommendations. We got really good articles this time. I want you guys who don't have Pit News Magazine to go subscribe. How come I can't find it? Here it is. I want you guys to go subscribe to Pit News Magazine. Unlock the secrets of trading with Pit News Magazine. You can listen to the articles. It's also a blog post for every article. You can listen to it. You can read it. There's even some videos in there. Sometimes in issues we'll put videos in there to go along with the stories, go along with the articles. The articles are all about trading. It's how you stay in touch with the community and feel connected. And you got to, when you're trading, you want to feel connected. We're such an isolated group. All right. We're so isolated. And so a way to feel connected with other traders is through this magazine, because you can listen, you can read it, and you can watch it, and you stay connected with your other fellow traders. And we talk about the things. The articles are primarily a lot of the things and the lessons that we talk about in the class. So we write all that stuff down, and then you have them all written out for you. So you have, nice articles, and then you don't have to read them. You can listen to them. And then you got all the notes for all of the ways of the trading strategies. And that's mostly what Pit News Magazine is all about. It's all about the trading strategies. Now we've got some really cool ones coming up in this month's issue, in the April issue, because we have an April seasonals. We got that stuff coming out. Plus there's 3 seasonal trades in there for you. Plus we got a really good article from a new author, Justin Black. And he's writing all about some really wonderful ETFs. All right. So some ETFs that he's recommending that you put into your portfolio. So he explains why. And then we got some really great articles, really good article from Claire Christensen. I know a lot of you guys have a little crush on her. Ask me how I know. Little crush on Claire Christensen. And then you women have a little crush on good old Aiden Gray. Both those two have great articles in there. And you're going to really enjoy Claire's article this time, I think. And then, of course, don't ever want to forget our little poem that's going to be coming out too. So it's got a great little poem in there. So looking forward to the April issue of Pit News Magazine, and would like to see all you guys subscribed. It's $1 for three issues. You get 3 issues for $1, and then if you like it, it's $49 a year. But you get the first 3 issues for only $1. Go try it. If you don't like it after 3 issues, you can cancel. You don't have to pay anything but the $1. So give it a shot. I think you're going to love it. It's a great way to stay in touch with everybody. And Pit News Magazine. We love it. We love it. We love doing it. We love putting it together. All right, guys. Tonight is class at the university. And for those of you who are enrolled in the next class, which is next month, it's going to be an online class. It's going to be a night class online. And actually, anybody in the world could subscribe to it. Anybody in the world could go to it, because it's going to be a nighttime online class. It's going to be through the university. So you'd go over to not Dixie, we changed the name, Utah Tech University, go into the continuing education department, and you sign up for Land Turner's class. It's going to be a night class, and we're going to talk about some really fun things in the night class next month. But this is going to be it's going to be tools of the trade. So we're going to be talking about all kinds of really fun tools, scanners and websites that we talk about. And we're going to go into in-depth on a lot of this stuff. We're going to be talking about the seasonal nature of markets, talking about TradeMiner, going into to show you a bunch of secrets in TradeMiner that most people don't know about, all kinds of really fun stuff in that class at the university. But it's a tool called Tools of the Trade, and it's going to be an online class. All right. I have to move this weekend. So that's another thing I wanted to let everybody know. I probably won't be teaching class next week because I'll be moving. I'm moving back to the Great White North. Starting to get warm and hot down here, and I got to run away. Actually, school is over. So I got one class left, and then I head out. But that one last class is online. So I got to head back up to my corporate headquarters up in Logan, Utah. I'm down here in St. George, teach at the university, and then I got to head back. So there'll be times next week where I will not be teaching class here because I'll be traveling. So there'll be 3 or 4 days, 2 or 3 days. Maybe I'll take the whole week off next week. So there won't be any class next week. Let's do that. Maybe show up if I get up and get everything set up next week, maybe a Thursday, Friday class, but probably take next week off, and then we'll hit it hard the week after and start all over with the new month. How's that sound? All right, guys, I'm going to let you go. Don't forget Pit News Magazine. Go get it, Pit News Magazine, so you can see the new articles that are coming out here relatively soon. We just tied it all together, and we're ready to go. So we'll see you guys tonight. Bruce says he loves Pit News Magazine. There's a good recommendation for you right there. So if you guys don't have Pit News Magazine, get it. Get Pit News Magazine. Thanks, Bruce. Appreciate that. And we will see you guys tonight in class.